The question is, why do high dividend yield stock attract investors? Why do high dividend yield stocks? Why do they attract investors? That is the context of this video. I want to first of all get conversant with the definition of high dividend yield stocks. In actual sense, high dividend yield stocks are shares of companies that pay out a relatively large percentage, of their stock price in dividends. They pay a relatively high percentage of their stock price in dividends. So a higher dividend yield usually indicates that the company is paying out more earnings in the form of dividends compared to other companies in the same sector or in the market. So it all depends on the percentage of the earnings being paid out as dividends that will classify a company as high dividend yield stock or something less than that. So we need to ask ourselves, why are they attractive? Why are these stocks generally considered attractive by market participants? So why are they attractive? So my one here is steady income stream. They are attractive in the sense that they provide that steady income stream. So high dividend yield stocks provide consistent cash flow, which is especially attractive, for retirees or income-seeking investors who rely on dividends to cater for their living expenses. They may be out of jobs, they may be retirees, and so they depend kind of almost solely on the dividends they get from their investments. So dividend yield stocks tend to be very attractive to them to cover their living expenses. Number two is on lower volatility. These class of stocks are known to have lower than normal volatility. So companies that pay high dividends are often well established. They are financially stable. They are very strong, meaning their stock prices tend to be less volatile than growth stocks. They don't move. They are not as volatile as growth stocks. So they provide that stability. There's no stomach churning kind of volatility that makes investors that gives investors sleepless nights. All right, and so this makes them less risky for conservative and risk-averse investors who cannot stomach risk. They tend to be gravitated towards dividend yield stocks. Number two is reinvestment opportunities. Dividend payments can be reinvested, to buy more shares, enabling investors to increase their stake in the company over time and potentially benefiting from compound returns. The more they buy shares, the more they have higher dividends. The more they have higher dividends, the more they buy shares, the more, and they enjoy these compounding. Number four is inflation hedge. These stocks act as a hedge against inflation. As inflation rises, having a consistent dividend income can help offset the loss of purchasing power, making high dividend yield stock a good choice for protecting real income. All things being equal, the expected dividend should be able to outpace inflation because they are high dividend, higher than normal dividend yield. So they should be able to outpace inflation. Or else, there's no point going for this strategy. So the returns coming in usually outpace inflation. And by so doing, your real income is protected. Number 5 is attractive for value investors. These class of stocks are attractive for value investors. High dividend yield may indicate that the underlying company is undervalued, presenting a potential buying opportunity for value investors who believe the stock price will eventually increase. Value investors generally go for undervalued, neglected, ignored kind of stocks. So they buy at a very cheap rate. All things being equal, the market will come to recognize the value of the stocks and then they will beat the stocks higher. The stocks cannot remain undervalued forever. Eventually the market will then, come to realize the value inherent in the stocks and they will pour in, buy in large quantities, and then the stock prices will go high. So these are darling of value investors. Number 6 is the tax advantages. Tax advantages. In some cases, qualified dividends are taxed at a lower rate than regular dividends, making them tax efficient for investors depending on their tax bracket and local tax law. So once dividend is considered as qualified dividends, it attracts a lower tax rate than the investor's regular income. Particularly for those who are in the higher tax bracket, they get to enjoy this particular advantage tremendously. So high dividend yield stocks are appealing for their reliable income, reduced risk compared to high growth stocks, tax efficiency, and potential for long-term growth through reinvestments, and price appreciation. So the other compounding effects, So these are the factors that tends to attract investors to high dividend yield stocks.